It's Wednesday, May 22nd. Welcome to MarketFoolery. I'm Matt Greer, and joining me in studio, we have Motley Fool analysts Emily Flippen and Jason Moser. Welcome. How are we doing?
Hey.
Doing well.
Well, it is good to be here. We're going to talk some Nordstrom. We're going to talk some Lowe's. Woof. That is a double woof on those. We'll get to that. But let's start with Target getting it done. Shares of Target up more than 9% on earnings at the time of our taping here. Same store sales up more than 4%, 4.8%, Jason, for the quarter. Now, we've got strong growth in their digital sales. That includes orders that you make online and pick up at the store. Jason, what's not to like here with Target?
There is not a lot in there to not like. And that's a weird way of saying you got to like exactly what they reported here this quarter. I mean, in a world where Amazon and Walmart have really been at the forefront of the conversation here, and Walmart obviously investing a lot of money into growing their e-commerce business and competing more with Amazon, Target has kind of been able to sort of just keep under the radar and do their thing. But you look at what has gone on over here the past few years. CEO Brian Cornell has got to be feeling really good about where things stand right now. And it's not to say that it's been a straight line up, but when he got there, I think back in 2014, I mean, there was the realization that they needed to make investments in digital and become a 21st century retailer. And lo and behold, I think they've gotten there. And if you look at some of the numbers, if you talked about comps there, this was actually their 8th consecutive quarter of comp growth. But, you know, when you look at digital sales up 42% for the quarter, digital accounted for more than $5 billion in sales last year, supposed to account for more than $6 billion in sales this year. Now, when you put that in the context of a top line that's around $76 billion, I mean, it's not obviously super important, but it's becoming more important as time goes on. And obviously, it's gaining some traction.
It was a good quarter for Target for sure, but you'll notice that with all of this, great comp improvements, and while it is notable that Target is such a retailer that's succeeding in such a challenging industry, it's still a retailer. So you'll notice that despite the company continuing to raise revenue, their cash flow from operations were actually negative. They actually paid out more in cash than they brought in, and that's largely thanks to the fact that they're really kind of paying down in large portions their $10 billion of accounts payable. So there's a little bit of, I guess you could say, earnings management going on here as well, because they knew it was going to be a good quarter. And so they take that hit during the quarters when people are going to be focused on the near 5% same-store sales growth.
Okay, so you're saying maybe we need to slow our roll a bit with Target.
I don't think you should slow your roll. I still like Target as a company, but I will say it's still a retailer. And so I think people can kind of forget that when you have quarters like this. Target is differentiated, has a differentiated strategy, but it still takes a lot of financing and a lot of work to make these companies succeed over the long term. And you'll notice that management expected growth to slow slightly throughout the rest of the year. So while it's a good quarter, I like Target in general. Personally, I think there are better places to put your money.
Okay, so let's talk about that. Jason, you mentioned some of the competition. Who's the bigger threat to Target, Walmart or Amazon?
I mean, I guess I would look at Walmart as probably being the bigger threat because it's the more comparable of the two. I mean, Walmart and Target are kind of those traditional retailers that are having to pivot and change their business model a little bit, at least here, in order to compete more with Amazon. And I mean, one of the signs that they're doing a good job of it, I mean, when they said they wanted to put their stores, the physical stores, at the center of their fulfillment, and that's that ship from store mentality that a lot of these retailers are approaching these days. I mean, they handled over 80% of their digital volume from the actual stores. So they've done a good job of turning those stores into stores/fulfillment centers. But I think Emily makes a really good point here. It costs a lot of money to keep that operation going. I mean, it's not like they've, reached the finish line and now everything's hunky-dory. I mean, this is stuff that they have to just keep on doing essentially on and to forever in order to stay competitive. And it really is one of the most competitive markets out there today when you look at what Amazon and Walmart are doing as they jockey for position. So, I mean, yeah, good quarter for sure. I mean, I don't personally own shares of Target. I don't know that this report makes me want to own shares of Target, but I mean, you got to commend them for a job well done.
Definitely. Target's always been forward thinking in that regard. I'd also have to agree, though, that Walmart seems to be the bigger threat. I use threat loosely because I think there's a world in which Target and Walmart both succeed. But in terms of direct competitors, while Amazon does have some overlap, I think the core customer, Walmart, is trying to win over from Target by introducing things like their own independent retail lines for clothing, changing their prices, their pricing structure, changing the experience of shopping in their stores, improving the online pickup sales, all these areas that kind of made shopping at Target a more pleasant experience than shopping at Walmart are slowly, or at least management of Walmart is slowly trying to change.
And I was surprised when I was looking at the stock and looking at the stock chart over the last 5 years. Shares of Target are up, but Target has lost to the market over the last 5 years.
Yeah.
When you look out over the next 5 years, do you think Target's a market beater?
We had that same question in regard to Walmart when we were talking about Walmart versus Amazon. I could see a world where Walmart could very well be a market beater. I think Target's got a little bit of a tougher road ahead. And I think that the biggest problem for them is just it's going to be the spending that they're going to have to do on an ongoing basis. And I think that could prevent the stock really from offering any kind of real attractive gains for investors. I mean, I don't know that I'd be looking at Target today as an investment where I'd call it a market beater.
And they made a big kerfuffle this week with their partnership with Vineyard Vines. You know, the pink whale? It's kind of stylish. Yeah, I kind of think of them as kind of polo-esque. And the stuff just immediately sold out online on Saturday and in the stores on Saturday, so much so that by Sunday, there were 9,000 of these Target Vineyard Vine clothing items on eBay already.
Which is insane. I mean, I guess we never really thought of Walmart and or Target as fashion forward companies. And I mean, I think we posed the question more than once that with Walmart certainly making some of those acquisitions and trying to become a little bit more of an e-commerce business and bring some brands under their umbrella, does a brand lose some cachet when it becomes a part of the Walmart family? And the same question should be asked of Target. I mean, does a brand lose some of that cachet if it becomes part of a sort of a discount retailer's world? I don't know. I mean, I would think probably, but maybe
not as much as it used to. If you're not competing on price, you're competing on service. And historically, Walmart's always been the price leader, and Target's been that service leader. And having Vineyard Vines is probably part of that service experience, right? You're getting that distribution, that demand, but you're not really taking the brand to as low of a level, I guess you could say, as Walmart. That being said, like I said, I feel like Walmart is slowly moving to be both a low-cost provider and a service provider. And if they're able to succeed in doing that, then one-trick ponies like Vineyard Vines aren't going to be enough to save Target.
Okay, well, I think a brand loses cachet when I start to wear it. So that's probably a good sign for Vineyard Vines, because I don't wear Vineyard Vines.
Unless it's Kirkland. I mean, Kirkland, that's when it's on the way up.
It's timeless.
Right?
It is timeless.
Yeah.
You mentioned it, and I was so excited. Washington Post food section today, they review all the local hot dogs. What is the best hot dog? And they have them ranked like there are 20 or 25 of them. Number one, Costco.
I just don't understand.
How great is
that?
that?
How in the world is that even possible? Really,
what
what makes it so great? Is it just because of the price?
It's the price.
I can't I've never had one, but I cannot disagree with that.
Wait a minute, you've never had one?
No, I haven't.
I mean, you come in here on a daily basis touting the merits of your Costco membership.
I know.
You've never had I don't know what I can ask you.
I'm just so excited to get all this stuff home. I can't take time to have a hot dog there. Okay, let's move on to Nordstrom. Wow, really struggling here. Shares falling more than 8%. Weaker than expected earnings, and Nordstrom cutting its full-year forecast. Now, Emily, among the culprits here, problems with Nordstrom's loyalty program. That seems bad. And slowing sales of full-priced women's clothing, which I understand from my limited experience in Nordstrom, that is an important part of the product mix.
It is an important part. And this 57% decline in earnings year over year is definitely representing that. So essentially, acknowledging the fact that they made a lot of mistakes. One being the changes to the loyalty program, so they didn't send out flyers. And it turns out a decent number of people relied on these flyers to remind them to go into the Nordstrom stores.
I love that. So a victory for snail mail. It turns out people still want something mailed to them.
Or a loss to Nordstrom's, which might tell you something about their core customer, right? If they're still relying on these snail mail catalogs, I guess you could say, to remind them to shop at Nordstrom's. But they also said that there's a poor poor merchandise mix. And that kind of goes into women's clothing. And this is what we've been citing as a main concern, at least I've been citing as a main concern with a lot of traditional retailers, especially clothing retailers, is that they have to order, purchase, and stock inventory, which is essentially trying to predict what people are going to want to buy. And they keep losing out to the TJ Maxx's and the Burlingtons of the world because they don't care what inventory they have. They stock a little bit of everything. It might be off season, it might not be the newest thing, but that doesn't matter to them. Nordstrom's needs to predict trends in fashion and demands. And it's what, in part killed JCPenney was because of poor merchandising management. And so Nordstrom's this quarter to me says the main thing they're struggling with is expertise in merchandising.
It's a very difficult space. I mean, we talk about it all the time. Sustainable improvement in the specialty retail, fashion style investments. It's really difficult because, I mean, Emily really hit the nail on the head there. I think they have to just be really good about predicting fashion, and then not only predicting the fashion, but predicting how much of it they're going to sell. And I mean, you look at a lot of these retailers' balance sheets, and when you see those inventory numbers start getting a little bit inflated, that's kind of a double whammy because not only is the inventory becoming inflated, but as time goes on, it becomes even more obsolete. So they essentially just end up writing all of that stuff off or selling it to these other chains and other stores in the chain there in the value chain for next to nothing. So I mean, when they're succeeding, the market recognizes that, but very difficult to succeed on a sustainable basis.
And it seems like one of the trends, and I'm gonna posit this as my fancy pants theory here, that as a society, and especially in the U.S., we've become much more casual over the last 20 years or so.
Sure.
Right?
Yeah.
So men, women, you don't see near as many business suits. There's not near as much of the need for that nicer formal or semi-formal clothing. Doesn't that hurt Nordstrom when people are gravitating to athleisure wear and they're wearing jeans to the office?
Yeah, I definitely think so. I was having this conversation with a couple of friends this weekend about the different clothes we wear to work. And at no point have I felt compelled to spend a few $100s on a nice pair of maybe a work suit or something. And that's not just because I work at the Motley Fool where we're very casual, but my friends as well who have more professional jobs. Not to say the Motley Fool is not professional, but a more professional setting job. And they do the same thing. It's very much more casual and it's hard to compel people to spend that much money. And if somebody is spending that much money on clothes, there are so many different ways to buy and consume those clothes that don't involve shopping at a place like Nordstrom.
Yeah, just watch Joseph A. Bank and Men's Warehouse. That's a good example. I mean, those two essentially combined, right? And I think they've got a long road ahead as well because that's all they really sell is sort of that formal attire and banker suits and whatnot. I mean, it's you just don't see people dressing the same way these days.
So when you look at Nordstrom, the stock shares down more than 40% over the past 5 years. What does it take to right the ship?
That's a good question. I think they put a lot of money into things like Trunk Club, trying to reach a different demographic, make it more accessible. But they've been sucking wind on Trunk Club, that being their delivery service, style delivery service, very similar to Stitch Fix. But they haven't really found a way to monetize that. And I think the main issue is that ultimately they're still a department store. And department stores are very expensive to run, and they haven't really made changes to the way that they procure clothes. So I think it's going to take an entire kind of like business overhaul or potentially a cultural overhaul for the United States to save this company.
Any chance they get acquired?
I mean, certainly possible. I mean, but it's you look at businesses when they're having problems, it's either a fundamental problem with the business or it's a problem in the market that they actually serve. And I think that's where Nordstrom really has a problem, is that the market that they serve has fundamentally changed over the past 20 years. And it's going to be very difficult for them to pivot because they essentially have to lose their identity in the process. And so...
But you're saying if they become something completely different, they have a chance.
That could be a solution.
It's never a good sign.
Throw up a few Nordstrom frozen yogurt stands across the country. I mean, everybody loves
Planet Fitness is looking for real estate, I hear. So maybe Nordstrom's new development should just be selling everything to Planet Fitness.
I like it. I like it. Speaking of the storm that's coming, this has nothing to do with the storm that's coming, but it's my desert island question. And let's say there's a storm coming or there's not, but you're somehow...
It's a storm that put us on that desert island.
That's true. Exactly. Okay, it's like Gilligan's Island. Exactly. You're on the desert island and you have nothing to do, but you want to invest, and magically somehow you're able to invest in one of these 5 companies. And I'm going to throw a few others that we've talked about in play here. And you've got to hold it for the next 5 years. Are you going Target, Walmart, Nordstrom, Lowe's, or Home Depot?
Walmart for me, hands down. I like all the work that they're doing. I think their management is extremely thoughtful, both with their quick reactions to things like one-day shipping, online ordering, trying to bring brands in-house. I think there's still a lot of runway for Walmart.
I'm going to remain consistent. I ask myself every quarter why in the world I don't own shares of Home Depot because I should. So I would definitely go Home Depot.
Okay, and I'm curious about renting a tile cutter.
We'll get together one weekend. I'll show you some stuff.
Yeah, I need a lot of work. I just caulked our shower, and but I'm terrible at caulking. It looks bad. It's not good.
He's not giving himself enough credit, Emily.
No, it's not good. I can't draw a very tight bead, and I went on YouTube and I watched this guy caulking, and of course he was great. But it just doesn't look at all like that.
Takes some work. Yeah. Takes some practice.
Yeah. I need a lot of work. Okay, Jason, Emily, thanks for joining me.
Thank you.
Thank you.
If you have any thoughts on, cutting tile or any of these stocks or caulking tips, MarketFoolery@Fool.com is our email, MarketFoolery@Fool.com. As always, people on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Matt Greer. Thanks for listening, and we will see you tomorrow.